All right, everyone, welcome back to another episode of the Slap the Ask show. Today we're on episode 20, which is pretty crazy, and we got our biggest guest per followers on Twitter. We have Tactical Trading Penny Stocks. You can follow him at John R. Spano 1. So with that, thanks for coming on the show, John.
You got it, guys. How you guys doing today?
Doing good.
We're doing
Cool
good.
day in Philadelphia. Really sunny out. Always sunny here, as they say.
Hey, can't complain. Same thing here in Chicago.
Nice.
Awesome.
So I guess we'll just hop right into it. So how did you initially get into trading penny stocks? Were you always in penny stocks, or were you a NASDAQ and then switched over?
I started penny stocks probably about 5 or 6 years ago. I actually worked down. I have a long background in, trading, but it was a little bit of a different experience. I started back in the late 90s, about 96, 97, started working down at the Chicago Mercantile Exchange right after I graduated high school. Worked for a French bank, Societe Generale. They had a subsidiary, FEMAT Futures, and I worked down in the agricultural department. So I worked in the lean hog pit, the pork belly pit, live cattle pit, and got my experience that way. Left in about 2005, started my own business. Late 2004, I started my own pest control business. And in the meantime, started trading. But I traded more larger cap plays and things of that nature. I do apologize about the dogs barking there. I can't control the little yappers there. So I started, trading large caps and stuff. And I would say, I was pretty successful, but I would say it's more luck. Following Jim Cramer and things like that, kind of learning. And it was a completely different ball game than doing futures. We would do futures contracts, commodities, and things like that at the Mercantile Exchange. So I started, learning how to trade, but would never find consistency. Oddly enough, about 7-8 years ago, I was going through YouTube and I found Tim Sykes, Ross Cameron. There's a bunch of guys, and I would just watch all of them. And in the meantime, it was about 2008 when my pest control business ran into some trouble. So I ended up getting into trucking as well. Got into a whole bunch of different things. When I was out on a truck, I would just listen to YouTube videos nonstop. That's all you had to do. And I got interested in penny stocks. So I'm like, these big large caps aren't working. I'm making money, and then it's pulling back on me. This long-term, buy and hold is not working. Market goes up, market goes down. Am I looking for a 30-year, 40-year strategy, or am I trying to make some money now? And that's when I kind of got into penny stocks and really kind of took strategies from all these different guys. And I was really mainly a day trader. I would hold nothing more than 24, 48 hours. Really just day-driven, news-driven catalysts, find something that's moving. All I wanted was something that was moving. Give me a little piece of that move, and I'm happy with it. Buy, sell, I'm out the same day. But then I started seeing last year holding was working. You look at TSNP. That was probably the really what opened my eyes to the power of these penny stocks.
Right.
There's a few of them. TSNP, American Battery Metals. Some of these that went from basically pennies to sub pennies to over $1. And if you have the discipline, it all comes to the discipline of holding these things, you can make a fortune. And that's where I started seeing where these swing trades are really starting to work. And that's where I really took my strategy, geared it from day trading to swing trading. And really that's where we sit right now. I can day trade. I like reading charts. It's more instinctive than, I have clean charts. I don't have all kinds of indicators, all of my charts. I have moving, simple moving averages, and SMA and EMA and VWAP. That's all I have on my charts, and I look at RSI. But it's more instinctive. But now it's just more or less these swing trades, finding catalysts, finding cheaper plays with catalysts, buying as much as I can comfortably hold, right, and then trimming on the way up, and that's the key. Making sure you're taking profits on the way up. This buy and hold diamond hands, it's good for a portion of your portfolio. But when you have a larger portion, 5-6 million shares or something, it's very difficult to hold through 30-40% swings up and down. So trimming and taking profits is key.
Right. Yeah, it's funny. I feel like all the experienced traders we talk to, they always use like 4 or 5 indicators. They keep it really simple. And then with penny stocks, like I noticed like your specialty is basically like the 00, 000 runners, finding really good share structure with upcoming catalysts and then swinging those plays. So I guess could you just like kind of go into like how do you identify those swing plays and like do you scale in gradually? Do you go on at once, or how do you kind of go about doing that? I know everyone has different methods.
You know, I'm going to actually use one as an example that was super successful, and that's Fernhill Corporation. I know, obviously, blockchain and crypto. That's something that I know was getting a lot of hype. I'm not a big crypto guy. I'm learning, but for me, I have little experience. But I know it's hot. It's where finance is going. It's all going DeFi. It's all going crypto. And when I saw Fernhill Corporation bring on Chris Kern, I look for things like this. I look for these small companies to make a shakeup when they're bringing in something, bringing in new management, bringing in things, doing things like this. That's when you start to keep an eye on them. That's when I start to look. And I saw Fernhill Corporation. They brought in Chris Kern. I did some research on him, and he had a lot of merger and acquisitions, blockchain experience. The main thing was the merger and acquisition experience that he had, and the success that he had in it. So this was about 0.0030. I only saw a couple of people tweeting about it. And one, actually, a video, Moon Market. I got to give that guy credit because he actually called this one out before me. When I was looking at it, I saw his video on it. I said, man, that kind of cemented what I was thinking, and then I went in on it. So sometimes you got to watch other traders, and sometimes that little extra DD that they did or something that they bring to your attention that you didn't necessarily initially see will cement your decision to say, you know what, that's now I feel more confident I'm going in on this thing. And I grabbed probably about 5 or 6 million shares. So you're looking at about a $15,000 to $18,000 entry, which if you want to break it down to a tenth, I mean, even if you got a tenth of those shares, a 600,000 at $1,800. When this thing jumped all the way to 175 in that range, at about 1.5 pennies, 1.5 cents, I was cutting about 30% of my position because that RSI started getting into the high 70s, low 80s. When I started seeing that RSI get up there, I said, I'm going to shave a little bit. I think we're going to pull back. This is the first run. And lo and behold, it pulled right back down to the 30s. So I added more there. Then it popped all the way back up into the high 2s. Again, the RSI got up into the 80s, where I said, you know what? Let's see if history repeats itself. I cut 30% of the position. It dropped all the way back down to a penny, where I absolutely loaded the boat with all my profits. And then, as you can see now, this thing shot all the way up to 4 cents. You look at past performance to predict future events. And sometimes when you're looking at these charts and you start to see something pattern just keep on happening, you say, man, this is a little too easy. So you start, you play it, and if the pattern, or your thesis changes, immediately cut, abort, change mission, cut your share size. But if the pattern's still working, go with it. And Fern was a perfect example. Another one was CYBL, where I saw all these contracts. I'm like, man, these guys have military contracts. And I mean, look what Dark Pulse did, and it's a very similar story. So that's what got me with CYBL. This is a can't miss, and at a 0.5 penny, I was loading everything I could, because I knew this thing is just gonna, even it's gonna have its pullbacks, but this thing's just gonna keep going. The story was very similar. So when I see things like that, another one that I'm looking at now is GDSI. I mean, love him or hate him, George Sharp knows what he's doing.
Running like crazy lately.
He knows what he's doing. The guy. I've been around a few days to see with this guy. He knows what he's doing when he's not boisterous. I mean, obviously he's arrogant, but he's arrogant to the point where it actually gives me confidence in what he's doing. Because if he fails or falls flat on his face, his career, he's going to look like the biggest idiot. This guy can't possibly miss. He knows he has a torpedo in his back pocket. So that's why I'm loading up on GVSI. I'm actually playing the more or less the management person than the ticker on that.
So so GVSI is interesting. You brought it up. Sorry, Jimmy, I just had a quick question. Like in May, like when George Sharp took custodianship, it had that big run up. I remember I was in it then. I didn't sell, ended up breaking even. But how early did you get in, and how long are you going to be holding these swings? I mean, it's a tough question to ask, but
this one in particular, because of George Sharp, I loaded up at right about that, about a half a penny, between a half a penny and a penny. I was loading up, and then I sold about, again. I right now I'm not holding. I usually like to hold a free position. I usually like to take my initial investment out and then let the rest ride if I'm confident in the swing. This one in particular, I had a load more, so I'm not holding a free position now. I had a load before because I know if this thing went up and down, I couldn't cut it or buy it unless I'm opening an international broker's account. So I said, you know what, for one trade, I'll just load, sit, and this is a different circumstance. But right. I've been holding it all the way since I found out he was, custodianship. But I have been, playing the RSI and, basically sentiment on Twitter and, cutting a little hair, buying more when it dips. That's just my day trader in me. It keeps that part satisfied where I don't just cut the whole position and move on to the next one. At least where I'm cutting and manipulating a position to try to work myself to a free position. I think that goal in every position that I have, it's more of a game I play with myself, to better myself in trading.
Mm-hmm. Yeah, and it's funny that you bring up the custodian thing, and I guess with the new SEC rules coming into effect next week on the 28th, the custodianships were obviously a big theme for OTC traders, just because we have these pink current tickers that are basically vehicles for other companies to move into, right? If you had to guess, after 28th, do you think the custodianship frenzy will kind of die down a little bit, or do you think it's still going to survive until an actual company moves into these pink tickers that aren't really companies? If that makes sense. The tickers just
it's gonna. I have a feeling it's gonna die down a bit. I think what's gonna happen is, you have to almost look at them as they're like used cars on the side of the road. These people George Sharp and Opportunity Zone and Alpha Ridge, and they loaded up as many of these things as they can, and they're almost like investment vehicles because they can put them aside and they're low maintenance. All they have to do, you really don't have to pay an accountant to pay for filings when you're not producing anything. All you have to do is keep current and say, okay, well, no business, stamp, send it in. So it's a very low maintenance vehicle where if someone down the line does come in, a big company, and says, man, I like that shell, I'll pay up for it. Now they have something where they can sell it as an asset down the line. So these are assets for these companies. Some of them are going to take a couple of years. Some might pop off right away. I think what people, some inexperienced traders had this vision that every one of these was getting filled and every one of these companies had a monster merger coming in. You don't know. You can get a guy pushing a taco stand come in here and he wants to go public and they sell it to him. You don't know what you're getting. Right. One of them, everyone thought, I forget what ticker it was, but they thought it was going to be crypto and it ended up being a jeans company. And the stock crashed. Beautiful share structure.
All the time, yeah.
The company was profitable. It was a good company, but everyone was like, oh, are you kidding me? It was just the sentiment and it killed it. So, I think these things you're going to be able to find some good ones. I'm not going to be buying them and loading them and hoarding them. I think my money's better spent trading and moving in active tickers than loading them and just sitting in inactive tickers. Once there's a spark, yeah, sure, I'll jump in. But I want that spark. I want that fire kindled first before they start moving. And then, hey, if I miss the first 20%, so what? I make 100% on the back end. And if I miss the first 30%, oh, well, I'm still feeding my kids, paying my bills, and my account's still growing. That's the way I look at it. Right. I don't care about being first. I just want to be there.
Right. I guess it's a difficult thing, right? People always try to time bottoms and time tops and things like that, but you can't. Yeah. So you might as well just have your position.
Yeah.
You can get lucky. With Fern, I timed the exact bottom on Fern at 48 or 40. That doesn't mean that thing wouldn't have dropped and went down another 15% the following day or something. It was pure luck. I just saw it on the chart. I saw the RSI. When I called it, that's where it was. I could do that probably 100 times. I might do it 3. But knowing the charts, and again, like with Fern, knowing the RSI, and if you start to see these patterns form, that's when you can start to play them. When you see something trading in a channel, that's when you could take advantage and you could buy and sell in that channel. Until that channel breaks, you've got a free ticket. You know where that thing's bouncing. And the same thing with like these, what's this, FS trades. I implore everybody to follow that guy. Excellent. He's the master at dip buys. One of my favorite strategies is when you see these plays and they've gone up 5-6 days in a row, nothing but green candles. You have to wait for that crack. And when that thing cracks, you can literally get a steal on one of those plays. And you can make 20-30% on a bounce. And it's just like a bouncing ball. You drop it, and a big bounce, and the bounce is just, the kinetic energy just kind of wanes, and then it just flatlines. Yeah. And you can play those channels.
Well, first of all, congrats on GVSI, 52-week high. That's pretty awesome. But just like an overall OTC question. So like we have the deadline on 9/28. I originally thought it was a lot more tickers getting suspended than what it actually is. I think it's around like 2,000 of like the 17,000. I originally tweeted like 10,000 and I was completely wrong. So apologize for that. But do you think, like, I feel like this week in the OTC, like we've had I feel like a lot of tickers have really been running this week. Do you think this is building up like the hype to the 28th? Or do you think this hype's going to keep continuing after that deadline on Monday? What's kind of your prediction?
I think it's going to continue a little bit afterwards. I think we're still going to get a little bit of euphoria afterwards. I still can't implore, if you're up big in a ticker, you have to take some profits, because it doesn't last forever. I mean, even like, I just think we're going to get a push, and then we're going to get our pullbacks, and you're going to get those algorithmic dumps. You have to watch for those, where every ticker, you look, and it's almost like simultaneous, like clockwork. Every ticker's got the exact same red candle in your portfolio. And you can't tell me that's not these guys pressing algorithms or working something out where they're, they have it where they know where they're going to put pressure on the market and try to shake people out of the market. Maybe like that's my conspiracy theory, coming into it. But, I've seen it happen so many times, especially in that run last year, where you'd have a run that would be incredible. You'd have a week, Monday, Tuesday, Wednesday would be incredible. And then Wednesday, the market would drop, and you'd have stocks down 20% on the day. You're like, what the heck is going on here? And then by the end of the day, they slowly grow, gradually come back. And I think we're going to see some of that too. So I think taking profits when you have your runs is going to be key. It's essential. And plus, when there's pullbacks, that gives you more ammunition to buy pullbacks.
Right.
Right. Yeah,
but exactly. I think it will continue for a little bit. I do.
Well, it's funny because I feel like in individual stock, like when I first started trading, I love to trade options, and especially like earnings reports for stocks on the NASDAQ. And the company would kill it on the earnings and then just dump. It's always like buy the rumor, sell the news type of thing. And I hope that's not the case in the OTC, but I feel like it makes logical sense, right? Like assuming there's a certain amount of money in the OTC, there's less tickers in it, then there'll be more money flowing into the current tickers. But I feel like also that must be already happening. Like who's trading these defunct tickers that can be delisted next week? I don't really know. And like, are they even going to get delisted? I think they're going to just move to gray markets, in which case there's not a lot of liquidity. You probably can't trade them, but then maybe a company will move in and actually make them current, and then they could go back on the exchange. Yeah. So it's kind of a weird space to navigate.
It's kind of like John was saying, like the barrier to entry to be a pink sheet company is not very hard. So like the tickers that aren't, pink current, they're just basically not active. So I would assume most people aren't trading them anyways, but I think it'll at least give a little more credibility to the OTC, which I think will be good. But I guess time will tell. We'll find out.
Yeah, one thing I find kind of funny, like kind of spin this into like the crypto conversations. Like we have all these people, particularly like Gary Gensler, the chairman of the SEC, saying like crypto needs regulation. And we're kind of seeing the OTC like regulate itself through the SEC, like rulings about having, current tickers, things like that. It almost makes like that could be like a framework that could be adopted to crypto almost. Because we have like these different tiers, right? We have the NASDAQ, New York Stock Exchange, and OTC. So maybe crypto could adopt something like that and make it more transparent for the actual user, so they don't get screwed over on rug pulls on these random altcoins and things like that.
Right.
This is a kind of a random question, John, but when you talked about your days at the Chicago Mercantile Exchange and like lean pork or lean hog futures, one of the first ways I got into trading was through Wall Street Bets. This is probably like 2018. And I remember reading on the board how like there's like this like disease going on in China, how it's like killing all the hogs, and apparently China's like the biggest pork producer, and how like you should buy lean hog futures. So I was just like, how the hell do you buy lean hog futures? Like I opened my Robinhood app, I'm like, where do I get like lean hog futures on this thing? So could you kind of just explain like what was it like being on the trading floor in Chicago trading these like agricultural commodities? Like I'm assuming it must have been like pretty crazy.
I started when I was young. It was, I mean, I think I was like, I just turned 18 when I started down there. It was fun. I mean, it was something where at first you were kind of like awestruck. You're like, what am I doing? The first few days you were scared, like you didn't want to move. Like if I mess something up, I mean, who is this going to cost and how much is this going to cost? I mean, I'll never forget. There was one time on the floor, we had a new guy at our desk. And he gets on the phone and he goes, sell 22 April and 22 Feb bellies. So I run to the bellies. I sell 22 Feb, and I'm like, wait a minute, there's no April. Jimmy, there's no April bellies. I said hogs. Well, as I said, there's no bellies. They heard me in the pit. I'm looking, that suckers. We're already in the hole for like 30, 40 grand. Wow. I'm like, oh no, the new guy, but that screws up. He says hogs. Just that fast, and these scumbags heard me on the phone and they just buried me. But it's fun though. It was fun. I mean, it didn't bury me. I didn't have to pay a thing. I was a clerk. I mean, they couldn't hold me to nothing. I just walked out, you know. But handed in my badge, and that would have been the end of it. But it was fun though. It was interesting. I think now it's mostly digital. There's not too many people on the floor anymore.
Yeah. Well, it's definitely a cool experience. I can't even imagine doing something like that. It reminds me like the New York Stock Exchange movies when everyone's like running numbers on the floor and everyone's going crazy.
I had to have my back to the hog pit and listening to bidding offers and know who was bidding, who was offering, who they were bidding for, who they were offering for. I mean, I did the hog rolls for Goldman Sachs. Wow. In fact, the chairman, I came up and was basically tutored by Terry Duffy. He's the chairman. He's been the chairman since 2004. Excellent man. One of the, I'd say like a father-son relationship. One of the best guys in the world. Terry Duffy, great guy.
Wow. Do you still follow commodities markets at all or no?
No. I mean, I follow it, but I don't touch it. I enjoy what I do with my OTC. I have my little niche and it works. And why change what's not working? I'll do a little NASDAQ, but I like the OTC. I think I feel I'm very comfortable where I'm at.
Yeah, one of our previous guests, Silly Sheep on Twitter, he was talking about natural gas when we interviewed him, and it kind of gave me like a little bug to like follow and see what's going on with commodities. So I usually really never paid attention to him. And he said they're like the widowmaker is the commodities markets, trading futures. It's could burn yourself pretty quickly. So hopefully that doesn't happen to our viewers.
No. Exactly.
So
I just follow the geopolitical events and just see what, watching the bad news on TV.
Mm-hmm. So John, I had a question. I noticed you said earlier, like you like to bounce ideas off of some other traders on FinTwit. Like you said, like Moon Market had a call that you looked into. It ended up running a lot. How do you you have so many followers on Twitter. You're probably one of the biggest OTC influencers in the FinTwit community. How do you filter through all these people commenting all these tickers constantly? Like, how do you know who to trust, and what relationships have you built on FinTwit that you are I don't know, chat rooms that you kind of trust, and how do you know who to trust?
I try to stay out of chat rooms just because it's I like my own ideas. I think when I see success and I see guys really, I see because you could tell there's people out there, there's groups that they call plays and they're all buying plays and they're all dumping plays and they're doing this. You have to really know, and kind of pin out. And I'm sure we all know who does that. So when you find people that are actually truly doing research, truly finding plays, and they're putting out a play not to, hey guys, guess what? Put out this play and they're going to dump right on your head. And when you find people that are actually looking for longs and something they're going to swing for 2-3 months, then you can see if their track record is good. That's when I'll start following and paying attention to what they're doing. And usually when my ideas meet up with theirs, when I'll see a play and then they'll but usually point out something that I've missed.
Right.
That's when I'll go, you know what? That's that kind of usually a gut feeling. I mean, it's hard to describe. I mean, I'm like old school Italian, man. I go off my gut, you know. It's just that's what I do.
Jimmy's from Long Island, so I'm sure he's familiar with the old school Italian culture.
Oh, yeah.
But no, it's interesting because I know like Jimmy and I, when we first started trading into more penny stocks, I know Jimmy got in like last August. I only more got into penny stocks like in November. But the first few months, like it was great because it was running in like February and January. But then, the market took a turn. It was really hard to make profits. At least for me, it was. And then I found like a couple guys on Twitter, like Bill Stocks, like Sully the Great, like Silly Sheep, like these guys that were like truly doing the research and not like pumping anything. And then I got in a group with them and I just learned so much. So I think it's like really important to like not realize that you don't know everything and that, like you said, bouncing ideas off of someone else and then you start learning and then you can actually start providing value to them. And then when you both kind of find a play, then it's like, wow, this could, really be big. So I think it's good perspective. And I think it's good for our viewers because so many of the new traders don't really know where to go because they're just, following the guys with the biggest accounts and just buying whatever they tweet. So I think that's a good point.
And that's not the way to go at all. I mean, all the guys you mentioned, like Bill Stocks and Thoughts. That's one that I'll look at him and he's got a lot of like just plays that you're like, man, this thing. How are people not noticing this play?
A lot of bottom
VMD and a few of the other plays that are just absolute monster bottom plays that you're looking at like. It's only a matter of time before these things are going to pop. So, you got to look for guys that look for good share structures. They look for a good story. They know what people, there's a PR that works and there's a PR that doesn't work. It depends on what's hot and what people want. Right now, crypto, DeFi, basically that's what it is right now. So, and that's why you're seeing a lot of these companies, and also don't be fooled by every OTC company that comes out and says, we're getting into DeFi, we're getting into blockchain. I mean, come on, just 2 years ago, you were getting into hand sanitizer when the COVID came out. And then, before that you were, I thought you guys were getting into, lumber. And then 2 years before that, you were into textiles. So you'll see a lot of this been around the OTC for a while.
How many NFT companies have you seen recently?
Yeah, exactly.
There's so many.
I didn't know what an NFT was a year ago. What the heck's an NFT? So yeah, and you're going to see a lot more of it. And the good thing is the good ones, those are the companies, when you see a company like, that you see them start producing, you start to see the contracts getting signed and you start to see the, the revenues coming in. That's when with the NFTs, that's when you start to really invest in a company. Now, as far as I'm concerned, they're all trades. You buy them, play them out till they work. The minute the management lies or something, then you sell it and move on to the next one. That's the way I look at them until they prove otherwise. And this year, really, Eyeless International, I mean, that's really was probably my only long all year until I got to the summer and then like Ferns and some of these other ones that I'm starting to like a little more now.
Yeah, that stock went on a massive run.
Oh my gosh. I had Eyeless on my watch list for like the last 2 months and I never bought. I felt so left out, but congratulations on longing that.
Man, sometimes you see something. You don't see that in the OTC too often. I remember the day they merged in with that company. I think it was January 27th or January 28th.
Yeah. And
it went from Dubs 2. And I'm seeing this thing flying. I'm like, what the heck is this Eyeless? It was already up like 300%. So I just bought everything I could without even DDing. And I said, this thing's flying. It's got a good share structure. I'm going to buy. I'm going to shoot and ask questions later. So I bought a bunch of it. And then when I researched it, I ended up buying more at the end of the day. I was like, man, this thing is really good. And I paid 100% more. I was buying at 2 cents at the end of the day. I just had, when you start to see companies like that, that's when you say, you know what, this might be something. It's hard to say, like some of these companies, when these CEOs over tweet and they're tweeting 30, 40 times a day, and you're like, wow, man, you buy the stock and then all of a sudden you get regret at the end of the day, like, wow, this guy's pumping his own stock. It's terrible.
Oh yeah, no, it's horrible. But I think one thing that's kind of interesting that you bring up Eyeless and like how long you've held it. I feel like a lot of traders that trade like NASDAQ stocks, they love to stay away from the OTC. And like one of their main reasons why they stay away is they basically say every stock there's a trade. There's no way you can long any stock in the OTC. I personally disagree with that. I think there are some stocks you can actually long and actually see as investments. Would you say that's like accurate? Like, do you think all stocks in the OTC are trades, or do you think there are legitimate longs in there? I know you mentioned Eyeless, but would you say like as a whole?
I think it's a gold mine for trades and swings. And also you can find a gem. Now think of an American Battery Metals. We were talking about that on my channel at 10 cents last year. The thing ran to $4. I wouldn't be surprised this thing hits $20 by the end of probably 2023. They've got deals in Nevada. They're with politicians, possibly Tesla. I mean, it's enormous, the scope of what they've got going on over there in Nevada. And that's an OTC company. It won't be for very long, but I mean, that's one you found at, 10 cents and say, hey, this could be one, and that's one of them right there. IQST could be one of them. They've got a lot of stuff going on. Trying to think of another one.
Humble, maybe. Who knows?
Humble.
Humble could be Humble.
Not if they keep diluting, but we'll see.
I mean,
Yeah.
I'm a fan.
They've got the right business model. It's just, obviously diluting makes a big difference. I mean, there's a stock that I'm really big on right now, AXTG. Just found out that they diluted a little bit, and kind of disappointed. He said there was going to be no change. Now I have a call with them after this. I'm calling him up, and I'm going to get some answers. And hopefully he gives me what I want to hear. If not, then I'm not going to be in the stock for much longer. So, and I will report that. But I like the play. I think long term it's going to be a really good play. I mean, if you look at Mara, Riot, like this is ground floor. And even if he dilutes half of what he has, it still has a good share structure to where if his plans roll out the way I think they may, this could be a $1 stock in a year from now. So I never get too concerned or overly concerned about too much dilution, but when it's to line the CEO's pockets and to do things, it has to be to grow the company or for a specific contract, and then I'm not too upset with it.
Yeah, I think it's important, like whenever you see dilution, is to look at why and look at the filings, look at how much they diluted, and then kind of ask yourself, why did they dilute, and if they're putting it into the company. And sometimes it's okay because, I mean, let's be honest, these companies go public to raise money. So like
exactly.
But yeah, I think that's a good point.
People miss that concept is that's in the beginning, that's why they're there. They're there to sell shares to build the company. And then once they become sustainable, then their profits and revenues, then they can start giving out a dividend as a reward. But that's how they start, every one of them.
So can you talk a little bit about your YouTube channel? I know I've watched a few of your videos. When did the inspiration start to create the YouTube channel and to start teaching others?
I don't even really know. I was just, what? I always like teaching. I talk a lot. So, everyone in my house, you talk too much. So why not? I'll be the dummy talking to the camera, talking about something I enjoy doing. So, if you watch my channel, you can see I don't even think I edited a lick on my channel for a year. It was just, I just pressed the play button and talked. And even if I messed up, I didn't even pause it. I was like, whatever. So I never really took it too seriously. It's just something to, just get some information out there. That's just to help whoever I can.
Yeah. I mean, the reason I like it is just because it's just raw information, just you going through your stocks and just saying everything you think about it. So there's no BS, which is really cool.
I like picking stocks that don't have to really be sold. I like it that, okay, yeah, I'll give you the idea, and if you like it, buy it. If you don't, move on to the next one. But, if a stock has to be constantly pounded and sold, and so then there's something wrong with it. There's something wrong with it.
Right.
So, and that's what I also look at with a company. If they're spending money on promotion, paying YouTubers, spending out emails and instead of growing their company, something's wrong with that company.
Yeah.
Right. Yeah, no, I agree. And I think you kind of bring up a good point there where if you are in a stock that is promoting itself a little too hard, that should be concerning. It should be, their products should speak for themselves. So then that's just how it should go. One last kind of question about OTC and like the way you trade. I know we were talking before about how you were timing Fern like so nicely on the RSI. It was like high 70s, low 80s. You then cut, and then as it dip down, you buy up. Would you say a low RSI is like a nice indicator that you like to trade on? Like if a stock is like super oversold, do you see that as like, all right, maybe I should get a position in this stock?
Absolutely. Absolutely. Oversold is one of the best positions to take. If you look at from last February all throughout the summer, there is a ton of beautiful beatdown plays that are right down there about 30, 20 RSI. The charts are almost identical. It looks like a shot up and then just a slow grind down. You can see they've all bottomed because they're all resting. There's no more dips in the chart. You can see them all resting. There's a lot of plays out there right now that I think they're ready. And when this OTC heats up, those are going to be some of the better plays to be in. Some of the ones that people are forgotten about. Good share. I mean, I would look for share structures under $1 billion. Try to keep it under $1 billion at least. I mean, some of them are going to be higher with a good story. And it's got to have a story and multiple catalysts. And right there, that's going to be a recipe for multi-day, multi-week runs over the next few months.
Mm-hmm.
Cool. Nice.
Yeah, I noticed like PRDL, I think has like 9 billion shares or something. That's one that people have been tweeting about a lot. But then the company says they're going to remove like 4 or 5 billion shares. So now the stock's like, jumping crazily off this news, but it's like, is that actually going to happen or not? You don't really know. So it's interesting with these plays, like you can have these like, massive amount of shares, but if the company doesn't do what they don't say or what they say, then it's going to drop anyways. So it's kind of
exactly.
Got to tread water lightly in the OTC. But
that's why track record means everything. That's why, a lot of people, I can't believe you're calling a George Sharp play. Look, the guy's track record speaks for itself. And again, with this, like with a chart, he proved last year he had the play of the year. And he seems very confident now. Why am I not going to take a chance at least with a few 100,000 shares?
All right, like I have a ticket on the ride at least. It's funny. I think George Sharp is like the perfect guy for the OTC. You kind of need someone that's a little bit abrasive for the type of people that deal in the OTC. So his mentality is a little
off-brand Rob Reiner over there in the OTC.
Yeah, pretty much. Yeah, that's a good way of putting it. But you're right.
But hey, like you said, scoreboard. He's a little brash. He's a little arrogant. Not many people like, and that's another thing is just because of society today. People are sensitive. When I was coming up, man, the language, what we called, the names we called each other as endearing. I mean, right now they probably call the cops on you. So
yeah, that's true.
Whatever, it's society too. People are a little too sensitive now. So, and that's why oh my, Mr. Sharp is so mean. Hey, if he prints me money and feeds my kids and puts money in my account from his actions, then hey, I'm all for him. I don't have to eat dinner with him.
Hey, damn straight.
Yeah, I always say the penny stock people are like a different breed, but
absolutely.
It's like the Twitter is like the Wild West of social medias, I feel like. Although now people are getting suspended, but I guess at one point was.
Hopefully it adds some nice credibility, some more credibility to the OTC, and we can get some, finally get some real companies to invest in, and call long-term holds.
Mm-hmm. Yeah, I completely agree. Yeah. I think the perfect world, the OTC should be almost like a startup incubator in that like young companies are trying to grow. Like that's how they raise capital. Instead of going to like the VCs where there's like the public can't actually access the money. It's all these rich people already who have all the money, who take up all the shares of this young company. Like, why not go the OTC route? That's kind of why I like TSNP and Humble. Like, I like the messaging around it. Granted, there's acute accusations of like scamming potentially or whatever. That's beside the point. But I like the idea of growing a company with public funds as opposed to VC funds. And that's why I hope the OTC comes like.
It's kind of like crowdfunding on a, public exchange, more or less.
Yeah,
pretty much with actual securities law and things like that in place. Yeah.
And Wall Street did not like that one bit. They did not like that because they like the the SPAC money coming in. They love that the IPO and the underwriting and all those. When they missed that, I mean, this is the easy way to go public. And all these companies figured out like, hey man, all I do is find a defunct ticker, clean it up a little bit, and move on in. And here we go. Now we're public. A lot easier, a lot cheaper.
Yeah, true.
It is funny. I got a lot of comments on like the tweet about how the OTC is suspending like a couple thousand tickers. They were like, well, isn't that going to invite in shorts and market makers and all that stuff? And I'm like, I don't think the shorts and hedge funds are very concerned with like these 00 defunct tickers. You know what I mean? I was like, I was like, I don't think that's like your biggest concern. Your biggest concern should be having $4 billion trading in the OTC now funneling into these remaining stocks. You know what I mean?
Exactly.
So, but I don't know. I just thought those were interesting comments. I think, Jimmy, you're going to ask something.
Trying to think of a question now. You put me on the spot, Luke.
Oh, sorry.
Yeah.
I thought I cut you off.
No, it's all right. But yeah, I mean, that's kind of like, I guess, my whole like holistic strategy when it comes to like investing. Kind of like what I'm looking for is I like the people empowerment aspect of like DeFi. You were mentioning crypto before, how DeFi is a big movement. I think that's kind of a great tool that people could utilize to sort of get rid of the middleman that is the bank that's collecting so much of, facilitating loans and giving a credit, things like that. It's like with technology, why would we need those types of people? And an OTC that is legitimized, why would we need VC investors? We could just have companies go public and raise money that way. But that's like a little bit too, I guess, head in the clouds thinking a little too bright, but that's how I would love things to be. Well, on that note, John, honestly, really appreciate you taking the time out of your Saturday afternoon. Sorry for the late start, but really appreciate you coming on and sharing your insights with us and our viewers, and look forward to following you on Twitter some more and getting more wisdom as you tweet and share your ideas about stocks.
Well, I appreciate you guys having me. I had a good time. I appreciate it, guys. Anytime.
Next
Thanks
time
so
in
much,
Chicago, we'll meet at Portillo's.
Hey,
That place.
I'm about to have that tomorrow afternoon.
Get some deep dish pizza too while you're at it, right?
I Portillo's, if I handle the deep dish, man, you might be good. Forget about it. I'll be done.
All right. Well, take care, John. Have a great rest of your day.
All right, guys. I appreciate
Thank
it.
you,
Thanks
John.
a lot.
Have a good one.